Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm going to be facilitating this session tonight with Rob Roy, one of the team here at Elliott Wave Options. We will introduce Rob here in just a few moments. We got a Fed meeting coming up tomorrow. It'll be interesting to see if we end up going with the 50 basis points or 75. So I'm sure we'll have lots to catch up on Thursday for the insiders meeting. I'll introduce Rob here in just a few moments after we get through some housekeeping details. And I just want to also welcome everyone from the live streaming platforms from YouTube, Twitter, and Facebook. Great to have you all with us. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or feel free to take a screenshot if you like, but that's the main point to take away. So for this session, we actually only have one method for asking questions, and that's going to be the Q&A window you see circled on the screen. At any point throughout the session, please feel encouraged to write your question into that window. If we have time, we will certainly try to pass it through at the end. Just know Rob holds a brief question portion right at the end after going through his presentation and then some case study considerations. So we'll have questions coming from Zoom, from YouTube, from Facebook, and Twitter. So we'll do our best to get as many through as we can, but just know if we don't get to your question, it has nothing to do with the validity. We just only have so much time. Lastly, in the chat window, I can handle any support related queries in there, or feel free to interact with other attendees. If you do want to interact with other attendees, be sure to change the "to" from hosts and panelists to everyone. That way it'll be visible for everyone attending the session this evening. I believe that covers off all the important details, so I'll get out of the way and introduce the man of the hour. That's Rob Roy.
Hi, everyone, and I'd like to ditto what Zach said. Welcome to everyone on all of the live social media services. Appreciate you all being here. And as you can see from the video, I am back in the Dragon Capsule, as I call it, where I'm surrounded by screens, etc. So good to be back in the Sunshine State. Bit hot, but back here in Florida. So a couple things real quick. I'd also like to piggyback what Zach was saying about the Fed meeting tomorrow. Could they go 100? The big chatter seems to be, are they going with the 50 they telegraphed? Are they going to bump it up to 75? Are they concerned about showing panic if they go 75? But could they go 100? It's going to see. We're going to see. But the market is certainly telegraphing that it feels that the Fed is way behind. We'll talk about that when we get to the chart. So real quickly, if this is your first TradeFinder, welcome to you. This is how it works. We talk about the U.S. market and we talk about the international markets as well. And I hope you don't tune out when we talk about the international markets, because all of the symbols that we show are tradable on the U.S. exchanges. So you might find a really good pattern that you'd like to trade that represents a foreign market, but trading on the U.S. exchanges. We'll review any case study trade alerts that we've done for our alert subscribers at Elliott Wave Options, EWOtrader.com. Then we'll go through and review case study considerations that we've done in previous trade finders for right here. And then with whatever time's left, we will look for one for tonight and then open it up to the Q&A. That's how it works. So again, welcome to everyone. And we take a look at the market. What surprised me, and I've been around a long time doing this, so I don't get surprised very often, but that's one of the things that's really cool about the markets, is sometimes you have things occur that have never occurred before. We had this big gap down on Friday and then another big gap down on Monday. So I'm not going to say that two consecutive gap downs have never happened before, but we did have 3 600-point down days on the Dow in a row, and that has never happened before. So we're in uncharted times with the markets. Exactly what's occurring has never happened in history. And so that kind of is exciting for me when we see things like that, because you learn, like, oh, something new.
Sorry to interrupt, Rob. We can't see your screen at the moment.
Technology. And think we had to do that, and we're back here in the Dragon Capsule on the laptop. I get it, but all right, everybody see the screen now?
Yep, you are good to go.
All right, so there's the first gap down that occurred on Friday, and then another gap down yesterday. That was surprising to me. So I even asked the question in the SPY update. For those of you viewing on the live streaming services, if you're not on YouTube, or even if you're on YouTube and you haven't been to our YouTube channel, I invite you to do so. At Elliott Wave Options, we post a market review every weekend, talk about the past week, give some ideas on what might occur on the week ahead. Pretty well subscribed to. We'd love to have you come along and view that. And the question that I ask is, at the beginning of the week, are we going to retrace this gap or head lower? And heading lower was one thing. I didn't think we would gap down again. That's pretty unusual to have two significant gap downs like this. And then, as I mentioned, having the Dow go down 600 points 3 days in a row has never, ever happened before. And if you want to see, going back to the past, is this unusual? Well, let's just go back. We don't have to go back that far. Let's just go back to when COVID came out. And you can see here, March of 2020, we had this gap, a little one here and another one, but then we retraced right away. And then we came back down again and bounced up. So it's not like two gaps in a row have never happened, but you can see that they're a little bit different. And then we didn't really bounce back today. Now things are a little bit different because we have that second day of the Fed meeting tomorrow when they're going to announce what the rates are. But what we had happen Friday and Monday was even more severe than what happened back when COVID first came out in March of 2020. And I think that's worth noting. If we look at the moving averages, so we put the 10-day moving average on, you can see we are significantly oversold down here. So do we have, you can see the high today never even got close to the high of yesterday. So that was a difference from now and March of 2020. Does the Federal Reserve come out and do something to calm the markets? Whether it's I don't think 50 basis points does it. If they do a 50 basis point rate hike, I think we go lower again because they're like, the Fed just doesn't get it. If you've been to the gas pump, you've been to the grocery store, you get it. Maybe they don't do that. Maybe they have people do that stuff for them. I don't know. But if they don't show that they have some sort of a handle on this inflation issue, I think the market goes lower. But if they do something, whether it's 75 or 100 basis points to calm the market, there's a lot of people that feel like, well, if they went 100, that would shock the market and it would be a negative. Can anything be more of a negative than what we've just been through? That would be difficult for me to believe. So I feel like there's a chance they do the 75. That's kind of a midpoint, maybe not so much of the shock and awe as 100. And it's enough to say, all right, the Federal Reserve is serious about this, and we get some sort of a bounce back. Now the question becomes a little bit different than the question we asked over the weekend is, do we bounce back and just fill this first gap and we save this one for later? Because look, the 10-day moving average is already lower than where the first gap was. So we can come back and satisfy the oversold condition from the 10-day moving average. For those of you that are newer on the live streaming services, one of my rules is no security in any time frame gets very far away from the 10-day moving average. Well, we're pretty far away from it now. So I would expect in the very near future that we bounce back up towards that 10-day moving average. But again, the big question is, do we just fill this one, or do we go above the 10-day moving average and fill that one? It's going to be interesting to see the scenario that I was talking about as far as, could the markets all bounce above their resistance areas to where all over the news is like, oh, the bottom's in and we're moving above resistance, and then the markets roll over? Well, that didn't happen. So we just powered lower. We went back up, tested the resistance levels, broke it in the Dow, but that's the only market, and then headed lower with, fervor to the downside here. We're almost to the wave 5 target. So are we just going to go get that over with and then bounce? Maybe. But we're getting pretty far from the 10-day moving average, and the Fed's only done 2 rate hikes. So pretty weird times as far as what's going on, although Elliott Wave is right on top of it. So you can see that we have the wave 4 right at the 38.2% fib corrective level, and we haven't quite hit the 61.8% fib extension, which will get us down to this wave 5 tap box. So the only question is, do we close either one of these 2 gaps first before heading down and hitting that wave 5 low. I think that's the only question that exists in the marketplace. Now, when we look at this wave 3, this is just zigzag heaven here in the wave 3. So I thought I would share this with you because I know a lot of people on YouTube have been saying, especially after the last video, like, you know, I've been watching for a while. I wasn't really a big technical analysis guy, but man, the calls have been pretty spot on with the market. So I'm rethinking, you know, this whole thing about technical analysis. Well, let's add this in there. You can see in the middle of the wave 3, which I really like zigzags in the middle of the wave 3. We had this nice one here and we came down, and 50% B wave correction means you're looking for 100% extension. We did that. And we also came down to 161.8. Now then we retrace back to the previous fib level. That happens a lot. So back to 100% before we proceeded down to hit 261.8%. Now I've said before, I can remember maybe, it's certainly not two hands, maybe even one hand, when one of the big markets, the SPY or the Qs did it back in 2000, but a few times when we actually went through a 261.8% extension. The Qs actually did it after 9/11. So coming down to 261.8 is a major extension. So that was it for that move. And then we bounced back up and we created the wave 4, did some consolidation here, waiting on that CPI report, which was hotter than expected. And that was it. I do think that had that CPI report shown any sort of a calm down in inflation, we would have got that break above 420, but it didn't. Not only was it not better than expected, it was even worse than expected. It was about as bad as the number could be. And as I mentioned in the video, David Einhorn came out and said he didn't think the Fed has the tools to fight inflation. That's a scary thought. Let's hope that that's not correct. Otherwise, stagflation could be a positive compared to what we could be looking at as far as runaway inflation. I don't think we're there yet. I don't think we go there. I think the Fed can do it, but the question is, will they? Will they be aggressive enough? They say they will. Well, I guess we're going to find our first clue to that at tomorrow's announcement. So I wanted to show you this zigzag pattern here. So what's happened here is now we have a new move. So we take that zigzag off, and now we come back and look at, wow, so that was a complex A wave, that big zigzag. Do we have another one? We do. And where's that extension? Well, it's 45% on the wave B extension, so round it to 50, which means that that would send us down towards 335, which actually gets us below our wave 5 target. But first stop would be not too far from here at 367. So moving on down towards that 335 could be where we end up. So there's two major zigzags. One's complete, and once that one completed, which created a complex A wave for the next zigzag pattern. And look what's right in between there, the wave 5 tampon. So Elliott Wave has been really spot on. It's been spot on Bitcoin, if you've been watching that, and obviously we'll get to that in a few minutes, but that's really what I wanted to share with you on the S&P. So let's look at the rest of the US markets. We'll do the VIX after the US markets before we start moving to some international markets. So here's the Dow, and this was the one, it was the last one to break the support level at 330. The first one to get back to it, got back above it, but not once did it ever give a confirmation day. Another one of my rules for those of you that are live streaming that haven't been with us before is that when you break a major point of support resistance, break out of a triangle, break a major moving average, etc., you have to have a second consecutive day, a follow through or confirmation day. And you can see there was a close above 330, no follow through, nope. Another close above it, no follow through, another close above it, no follow through. Not one time did we get a confirmation day of breaking above the 330 level, and that's shown to be exactly what ended up occurring, which was breaking down on the Dow and heading down. Now we're pretty much in step with the S&P. They look very similar. So looking at the Qs, as I mentioned before, I felt like the Qs for this entire year are going to underperform. And looking at this chart, look what happened. That's not what you wanted. We had the wave 5 labeled back here at 105% extension. We got a little bit of a bounce, and then now we're at 113% extension, which means we're likely going down to that 161.8% extension on the wave 5 on the Qs. That's pretty ugly. But right now, hopefully you're looking at this and say, hey, is that a zigzag right there? Well, let's take a look at it. And you look and say, it sure is, right at the 38.2% fib level, which means there will be a bit of resistance there, or support, however you want to view it, when we come down to the 61.8% level at, call it 258, rounded up. Again, the question is, do we bounce back up and fill these gaps first, or do we need to come down here and then we bounce up and fill those gaps? Those gaps will get filled. Just don't know if it happens first or whether or not we come down here. And that is all going to depend on the market's reaction to the Fed announcement tomorrow. Does the market feel like the Federal Reserve is finally getting it and getting on top of this inflation and being a bit more aggressive? Or does the market feel like they're still behind the curve, and that's going to be an ugly day if that's it? And then we'll be massively oversold. So I think if you're looking at odds, the odds are that we're already oversold. So perhaps the Federal Reserve says something right to calm the markets and we get a bit of a bounce. But when you look on the Qs, even though we're oversold, it's not horribly oversold. So could we go down to the 61.8 tomorrow? We could, as scary as that is. But we are ripe for bounces based on these oversold conditions. So that's, let me show you the small caps first, then we'll do the VIX. So let's look at the IWM, and just all the way down here to 170. Now we're in danger of losing that. We had talked about how we had this range for 2022 of 190 to 210. Then we broke that and we came down and said, well, is the new range going to be between 170 and 190? Well, we need to bounce right now if that's going to happen. If we lose that, then we're probably coming down to 150 on the IWM. That would be right smack in the middle of that tap box and give us a point where 170 becomes resistance. The IWM likes these 20-point wide trading ranges. We're oversold there as well. Tiny bit more than the Qs, but not as significant as the SPY or the Dow. You know, if you want to be long small caps, you need a bounce tomorrow. So there's no, it has to happen tomorrow, because if we break that, then you're looking to see if we get a follow through day to move down to 150. So looking at the VIX, this is what just blows me away. We still don't have a move above, or a significant move above 35. It's just unreal to me that with these ugly days that we've had, something that's never happened before, with the Dow down 600 points or more 3 consecutive days, the VIX hasn't even gotten above 35. So what's going to happen if we get that spike that I've been talking about for a while? Is that cathartic sell-off to get the VIX to spike up 40 or above, like it did back in March. Now, we talk about the gaps that were not as severe as they were back in March of 2020, but look at the VIX. The VIX went to 85. And yet the gaps weren't as severe as they are now, and we can't get above 35 on the VIX. So what would it take, a 2,000 point down day? What's it going to take to get the VIX above 35? That's unbelievable to me, that we've had these ugly days and not had the VIX go significantly above 35. It closed above it one time, and that was on March 7th. Other than that, we've traded intraday above 35, but only one. Can you imagine that? Only one close with everything that's occurred in the market above 35. That may be the most unbelievable thing to me of all of this. All right, so let's go ahead and take a look at some of the international markets real quick. The EWC, you're already going to know. I'm going to go quickly through these. They're just all ugly, and they all look the same with what's occurred on the last few days. Just with these gaps down. With the EWC, we're right here at that wave 3 low. If we break that, which we probably will at some point, we're going down below 33, but significantly oversold here as well. Same thing with the two gaps that occurred. Can we find some support there at the previous three and bounce back up? At least fill the one gap and get back to the 10-day moving average. If we don't fill them both, we had the same kind of scenario here on the EWC back over here where we were talking about this right back in this area. We did come back and fill this first gap, but even with this high that occurred back here on the 2nd of June, we still haven't filled that gap above 39. We got really close, but didn't quite fill that gap. Well, that looks like that's going to be a ways down the road before that one gets filled. We don't even know if we can fill this one at 37 here in the near future. Perhaps if the Fed just creates a massive short covering rally, we can get back up there. But now look what 37 is now resistance. So it had been support for a while and we broke below it back in May, got back above it, but now it's back to resistance again. So we got above it, but couldn't hold it. And looking at Australia with the EWA, and that's just ugly. And looking at that, you can see that's a perfect zigzag pattern right there. And you look, where are we? Look at this. So those of you that are starting to come around to say, hey, this Elliott Wave technical analysis stuff may be pretty good. Look at this zigzag pattern here. So there's the move down right at the 61.8% fib corrective level. And then that's supposed to be 100% extension. We went to 101, which is where we are right now, which is dead smack in the middle of this tap box. How can you argue that the forecasting ability of this, it's just been unbelievable with everything that's been going on, which tells you Elliott Wave, the more trading is going on, the more accurate Elliott Wave is. So there's a lot of stuff that's going on. But now we can see, all right, this is the first market to reach its wave 5 target. Australia, can they be the first to bounce and move back to the upside? This is what I'll be looking for. And you can see big gap, big gap, big gap. Holy cow. And then we're right at the wave 5. Do we get back up to the 23 level? Do we get back up to this area here at 23? Well, we'll see, but that would be a heck of a move to fill that gap. So if we're looking at Australia to lead us, an international market, just because it's the first one to actually reach its wave 5 target, can they get back to that gap? Or is that going to show us that the first gap is all we get, and then we run into these resistance levels, and then we're looking at moves to the downside further? That means that with the fact that we've hit this 100% extension, we would be looking for Australia to go to 161.8 at some point, but probably not right away. That's just too vertical to the downside, and vertical moves don't last. If you go back and look at the recordings, one of the other things that I said is one thing that we know won't last is the separation that occurred here between the 10 and the 50-day moving averages. They will come back together. Now, normally the 10-day makes it all the way back and touches the 50-day. We didn't do that, but we did recover that separation. And that's just another one of those rules, like the 10-day moving averages, they just don't stay separated for that long. And so if we go back and look at where we are with Australia, again, you can see that now we've created another massive separation. So there was this one, separation. We did come back up and touch it with the Aussie market. We didn't with the SPY, but we did with the Aussie market. And now we have this separation again. So could that be telling us that maybe we are set for a little bit of a bounce back to the upside tomorrow? It's going to be really interesting to see how that plays out. So I know you want to look at Bitcoin. So here we go. Let's add that one in. And mention this over the weekend that, oops, Bitcoin, that over the weekend, if we broke 28, we were going to 24. Well, that occurred rather quickly. And we had this long consolidation thing here, right there at 28. And boom, we broke below 24. I was talking to some trader friends when Bitcoin was tanking and said, oh, well, we're going to 24. And I didn't think it was going to happen the same day. And so now we look down and it's likely 20 is next on Bitcoin, and it's right smack in the middle of the tap box. So we're already touching the top part of it. So we got down there, but are we going to come back to 20? I think that probably happens. Now we could bounce first because also in oversold territory here with Bitcoin. So see how that plays out over the next few trading days as well. And it sure seems like that Bitcoin winter that everybody's talking about is a real thing. Now you're starting to get the naysayers are coming back out now. So we may be getting to the point where we're near a bottom, because now we're starting to get people come out and say it's a fraud and it's not real and all. So all that kind of stuff's coming out. That's when sentiment starts to get really ugly, obviously, by the comments that are being made. So if that plays out, then we may be near a bottom. So perhaps we go down to 20,000 and that's it, and that holds. We'll see how that plays out. Looking at India real quick, and the Indian market had really tried to hold in here at this low, and this is pretty ugly here as well. We bounced up, but we only went to the 38% fib level, another major fib level. That's the first level that Elliott would really recognize as a corrective move. So this bounce was nothing more than a correction from this vertical move to the downside. We got two vertical here coming down. So we corrected. Where do we correct to? Right to the 38.2% fib level. If this is all new to you, join us as a subscriber at EWOtrader.com. Wait till I'm about to show you something here pretty cool. Become an alert subscriber. But we broke below that. So we're going to come down here to this wave 5 target. We're at a 50% extension, likely to come to 61.8. That's probably happening in the not too distant future as well. Again, do we bounce a little bit first? And then Germany, we were hoping that Germany was going to get a break, and now it's ugly again. And look at this. At least this time, the wave 5 didn't relabel. If you've been with us, you know that wave 5 relabeled to a 3 times. So we come down and make the new wave 5. Well, we didn't relabel again. We started a new impulse pattern to the downside. That might even be worse, as far as the fact that we could continue to go lower. But again, very vertical to the downside, pretty ugly, multiple gaps, oversold from the 10-day moving average. Everything looks like we need to bounce, and we will bounce. I just don't know if we go a little bit lower first and then bounce, or do we just wash it out? Maybe that's what it takes. Maybe we just get this really ugly flush out to the downside. The VIX finally spikes to 40 or 50, and then we're done, and then we bounce. I can see that scenario playing out too. I don't think it certainly wasn't in the forefront of my mind over last weekend, but now it's become, well, it could be that we just add on and we get so ugly that we do have one of those cathartic sell-offs where everybody really panics and says, I got to get out. So if the Fed disappoints the markets tomorrow, it could happen tomorrow. That could be the day where all these wave 5s get hit, not just Australia, and everybody throws in the towel. We get the VIX to 40 or 50. That's a scenario that I see that might have even be more apt to play out than the potential to break above resistance at 420 on the SPY. But holy cow, when you look at Germany, it's just like, and if you're long the German market, it has not been fun. It doesn't look like your pain is over, but perhaps a little bit of reprieve in the meantime. But all that's going to do, unless that catharticness happens tomorrow, the real ugliness that I'm talking about occurs tomorrow. Otherwise, bounce first, and that's just a setup for a new move to the downside. All right, so what I wanted to share with you is a case study alert that we just closed out for our subscribers today. Check this out on SFM, Sanford Farms, which is it's obviously in the food industry. And this was in our new time strategy. This is our AI-based time strategy. And if you've been looking at our page on the internet, on YouTube, you've seen how we've been talking about how we actually have a strategy. We're ahead of the market here. CNBC is talking about how AI is probably the future of technical analysis. We already have a strategy and a complete program of AI that looks for stocks to stay in a trading range. And so this was set up, and I talked about this last week, where we had just a great setup here for a butterfly, where we had long-term support and resistance, and the stock dropped off an earnings report right dead in the middle. And so in a butterfly, you sell those legs, you buy these two, so you have your resistance, you have your support. It was a really nice setup for a butterfly. You're looking for the stock to stay in a trading range. So it moved into a bit of a triangle formation, so it broke out of that, but it came right back down to the point. If you've been with us, you know that with these corrective triangles, you get a breakout, and then the breakout gets retraced. That's part of Elliott's rules on corrective triangles. So that occurred, and exactly what was supposed to happen. So we took the profit today, 41% in 38 days in a sideways trade in what's going on with the market right now. I think that's pretty amazing. So taking advantage of these big drops in the market and putting on stocks to stay in a sideways trading range that are kind of in shock is the type of thing. So worked out extremely well. So I hope you found that kind of cool. Let's go back and look at some of the case study considerations that we've done in past trade finders. Back on May 3rd, we looked at this on Reliance Steel, and you can see basically we're right back to that wave 4 level. So we came down, we bounced up, we're right back at this level. So we'll see if that 4 holds at the 50%. But at some point, we're going to get some sort of a reprieve. When you see all these metals acting like this, we ought to take a look at the dollar. So let's look at the dollar real quick and see if it looks like it's going to give a break. And I think it's coming, because that's why the metals have been performing, is the vertical move of the dollar. And that's really expecting something significant out of the Fed, but it's too vertical. So now the dollar is overbought. So if we get a move back down in the dollar and it starts to calm down, that could be enough. That could give stocks like Reliance Steel, the metals, a chance to bounce back and maybe even go up and hit this wave 5. But we're going to find out a lot of information regarding that in tomorrow's trade. And then we did have on May 10th, this downside trade on Westlake, where here we had a wave 5 completion. So we're looking to come down to this previous wave 4. And as you can see, there we go. So we're going to go ahead and take that one off. It did what it was supposed to do. So if you followed along with that one and you haven't taken it off, then maybe you're getting a little bit greedy, because it just did what it was supposed to do. So let's go ahead and take the gain there and move on. And then the next one we have is, and this has actually been holding in there pretty well. It's down a bit, but better than a lot of what's going on in the market. And we've still got a pattern here of higher lows, and we also have lower highs. So we've kind of got a bit of a triangle formation here. So the question will be, do we stay here? Now, if we break below that, then we're probably going to extend this wave 5 lower, and you may want to make that a bearish trade. So if you want to adjust and move to a bearish trade, you would want to see if it holds that trend line. If it does, then it still has the ability to break to the upside. It's just a big triangle forming. But if it breaks below there, then we're probably going lower, and it might be a downside trade. Well, then we had Mosaic, where we looked at this. Now, this one we gave you the 2 and said, hey, do you think there's a better chance of Mosaic bouncing, or do you think there's a better chance of Snap coming back to fill that gap, which had just had that big down day? It was a little bit of a setup, and I'll explain why here in a second. But Mosaic has broken below this level and came back and filled the gap. We're right at the 61% fib level for this wave 4. If it's going to bounce, if it's going to hold, it's going to do it right now. If it doesn't, then we're coming down to 40, and you have a nice downside trade. So that's what we're looking for. Can it hold this level right at the 61.8% fib level? If not, then it's a downside trade. But you can see that against the negative tape, it was up today. So we'll see how that trades out over the next couple of days based on whatever occurs out of the Fed meeting tomorrow. And so then we set this up and say, hey, do you think this is going to bounce? Well, our AI identified this as one of those that would likely stay in a trading range. And so you can see, oh, there's SFM. Here's the snap. We set this out as an alert to our alert subscribers as a sideways trade. And look at this one, generated over 30% in 12 days. And so that was the same pattern, the same setup there. So the next day, we sent that out as an alert. And look how we nailed this. So you can see the exit. And we had a really quiet day. Look how tiny that bar was right there at the midpoint. Some of our subscribers questioned, why are we taking this off early with just 15 days into it? Couldn't we hang around? Well, something was weird with that really low intraday volatility, and it happened to occur right at our strike price. And watch what's happened. Boom. See how the June straight down after that. When you have those weird things like that, it just tells you, hey, something's amiss, and we broke to the downside. So we nailed the exit there on taking that 30+% gain. That was another example of what we do for our alert subscribers, and the timing just couldn't have been any better. You just see those things and you know, hey, something's up. It's not going to stay like that. Let's go ahead and make a change. All right, so we had this strangle on JD where we saw this triangle pattern that was breaking out. You could lower this line a little bit and say that was a breakout day if you wanted to. And then there's the move to the upside, that pretty vertical move there. And so if you're still in this one, you're just being a little bit greedy, especially with where the market is. So we're going to close that one and take the gain too. So there's two profitable trades, one to the upside on JD with everything that's going on in the market, and then our sideways trade. So again, if you're still around in those, you're probably being a little bit greedy. So here's Rio from last week. So you can probably guess with all the metals that's been going on, what happened here. So there's a reversal back down. But once again, we are significantly oversold. Gap. And we haven't got back down to 65. If we break 65, then it becomes a bearish trade. But at this point, if the dollar can relax, if the market bounces, all of these metals are way oversold and they're right to make significant moves. But it's all going to depend on what happens tomorrow with the Fed meeting. So that's how this is all going to play out. All right, so now let's take a look and see if we can find a case study consideration for this week, and then we'll open it up to questions. So look at the pre-computed searches. If you're not familiar with the software program, it's called Profit Source. To me, it's the best Elliott Wave software that exists on the market. You can find out more about it at hubb.com. And if you're an Elliott Wave Options Alert subscriber and you have the software program, they added in all of these searches. And when they're called pre-computed searches, because you can create your own search. You can create your own search out of whatever your favorite indicators are. And you can do testing. You can say, hey, I want to put X number of dollars in the trade. I want to exit if it has an X% loss or a Y% gain or whatever. You can do all those things. But when it's pre-computed, it comes out already, the search is already run. So it saves you a bunch of time. So believe it or not, we have a bullish impulse on all these bargain bar. So let's see, they had a good earnings report and man, just not succumbing to the selling at all. That's pretty amazing, isn't it? Do we want to be bold enough to actually put on a bullish trade right now? Well, I mean, I think because the markets are so incredibly oversold, you could say, yeah, it's worth a shot to go ahead and take a shot at something to the upside. We are at resistance here, and it is worth noting that we tried to trade above it here, and that was on earnings day on the 9th. I think that was the earnings day. Might have been the day before, and there was no follow through. Remember when I kept talking about that follow through day? We didn't have it, but now we're back testing it again. So we're taking another shot at 55. And if we can get above that, we're coming up to 62 to 65, somewhere in that area. And when you look at the DMI that is so impressive with everything else that's going on in the market to see that we have an ADX moving up like that, the positive directional indicator moving up, the negative moving down. That leads you to believe that we will break above that resistance level there. And then we look at the moving averages, and you can see that if we walk this back, another cool thing that the software does, you go back here and see that, well, there, that tells you why we weren't able to break above resistance then. We were overbought. See the separation between where we were and the 10-day moving average? And I talk about this a lot. When you're in an overbought scenario, you just don't have the energy or momentum to break a major point of resistance. It's best just to calm down and go through and retrace a little bit, gather yourselves, generate some new energy, try it again. And I think that's exactly what's going on. I think that looks pretty good. And you may be thinking, you're crazy to be saying, hey, we want to look at a potentially bullish alert with everything that's going on in the markets. But I do think that that's worth a shot. Now, if you wanted to be a bit more conservative, and I would totally understand that, especially in current market conditions, you would say, nah, show me. I'm going to Missouri this one. I want to see it break above and confirm above 55 before I enter. I would have no qualms with that at all. So if you wanted to be just a bit more conservative and let it break there, note what else is lying out here. Oh, Mr. Gap over here, right smack in the middle of the tap box. That gap needs to get filled, and it just happens to be exactly where the wave 5 forecast is. Now, if we do get just an ugly day tomorrow, then you can look and say, that probably wasn't the right idea to try to look for something bullish. But it's held in there pretty amazingly well, considering everything else that's going on. And the consumer isn't broken yet. Probably getting pretty close to change spending habits being changed with what we have to spend at the grocery store and the gas pump. But you know, the consumer is probably going to travel this summer. They're probably going to pay the inflated oil prices, and we'll see how the retail plays out. But you know, this is in the lines of a Walmart, something like that, where you're looking at something with discount prices. So let's be bold, and we're going to go ahead and make that OLLI, the stock symbol is OLLI, to the upside, believe it or not, as a case study for this week. If we get the bounce out of the markets, we're probably gold. If we get the cathartic sell-off, we may come back down here to 50, and then that would be your area of support. So that's the stop. 50. If it breaks below 50, then we have a whole different ball game. Then we're looking all the way back down here, and all that could play out. But let's give it a shot in the potential for a market bounce, which I know is being kind of generous to the Fed and saying they're actually going to do something that the market feels a little bit more comfortable with. They haven't done it so far. Is tomorrow the first time in a while? Maybe, perhaps, we'll see. All right, so right at 9:45, Zach, I hit this one right on time for a change, and we'll go ahead and take a few questions here. If you've got some, if not, we'll call it a night.
Oh no, there's tons of questions from both YouTube and Zoom, so we'll pass them through with the remaining time. Well done on being on time, back on that train again. So
let's say something about this dragon capsule.
I think it's good luck. It's where you're meant to be. So we'll start out with this first one from YouTube from Yo2131. Says NXTP is a great stock to look at.
Well, NXTP, next play, and let's see. You're playing in that area way back in COVID days when we were doing all the meme type stocks. So, well, it had a pretty good day on the 9th, but since then, I don't know. It needs to hold at 25 cents a share here. And if it doesn't, then it goes right back down to test those lows. So you'd have to be pretty, you would want to be playing with your really play money here. that you're willing to lose to take a shot here to see if it can move back to the upside. If it does, it's got resistance at 40. So if it can hold 20, you probably have a double. So it probably goes from 20 to 40 here, or 25 cents to 40 here, because the 20 is where the low is. But at 25 here, you might get a run to 40. But I think it needs the market to do that. Otherwise, I think you're right back down at 20 cents. So if you've got, if you got a few extra dollars, you're like, what the hell, and take a shot at it, you could do that, but know that's high risk.
Yes, indeed. No question there. So we'll go back over to Zoom. Randall's got a question here. Hi, Rob. Thanks all for that you do. Do you think HOFV will garner any attention with the USFL playoffs being hosted on the upcoming enshrinement in August?
Maybe. I don't know that it's going to be enough to create much of a bounce, because when you see this is organized selling. So the one thing that could be a positive is, let's see if that's a zigzag right here. Moving down, so it looks like that. It looks like it wants to go lower there. So maybe we're just not significantly oversold. Let's see what the volume is. That when you see a move like that, that's organized selling. So those that are holding this they're just getting out. They're unwinding it and they're getting out. So you see, a few tops here of average volume. The best you could hope for here would be a really short-term bounce, but it looks like it wants to hit 50 cents first. At 50 cents, then I think you take a shot at it and see. I don't know.
All righty. Thanks, Rob. So I got to pass through some funny comments I think you'll get a kick out of from YouTube. First one going to be from Valheco, saying, Mr. Chuck Norris, thank you so much for your analysis. One question, when is your next movie? Just kidding.
Chuck's getting up there, I think, but I don't know if he's going to be kicking butt anymore. But is he in the new Expendable? There's a new Expendables movie coming out.
He might be.
He might be in that one. But yeah, I got the hat here, sitting right here.
It'd be a fitting movie for him. And then longtime subscriber Jess says, got you in a stranglehold, baby, about 10 minutes ago. So
did that come through? Oops. Oh yeah, I'm going to see Ted Nugent in a couple of weeks.
Yeah.
And for those of you that know, I'm a rocker. Talked about that in the past, but I've seen Ted Nugent more than any other artist out there. So all the way back to my high school Cat Scratch Fever days. So yeah, Stranglehold. I'm very impressed that you knew that song.
Yes, indeed. And I was thinking maybe there might be potential for a T-shirt collab in the works with Ted Nugent, Rob Roy, with the multiple purpose, dual meaning with that.
Yeah, but I should reach out to him. I did one of those. This is getting way off topic, but I did one of those VIP things with him once where we talked, and I don't know, maybe
you never know.
Winding down his career, you never know. Worth a shot.
Can't hurt to ask. So Jess did ask if you had remembered to chart the S&P with long-term Elliott perspective.
I didn't. So we'll turn the Elliott Wave long count on. So here's the long count, which just basically is a little slightly different variation of the Elliott Wave counts. And you can see that it's not going to change the chart. Obviously, that's not how it works. But note that we are not in a 5-wave pattern. We're in a corrective pattern, which means that, I get back to my tool here, that we focus on that zigzag that I showed you. And so we come back here and we look at this, and then we're at the 61.8. I'm glad you brought that up. I had totally forgotten about it. So thanks for reminding me. I did promise I would look at it tonight. But look how good this zigzag is. And obviously, since I forgot, I haven't looked at it. But could we bounce right here from the 61.8% level before going down here? Or do we get just one of those unbelievably ugly days tomorrow to the point where it does wash the sellers out? We get the big spike in the VIX, and then we finally bottom. You know, if you're trying to think about it from a common sense standpoint, if the Fed disappoints the market tomorrow and we have a super ugly day, it would have to be that all the sellers have sold and there's no more sellers. That's the only reason we would bounce, because if we did sell off like that tomorrow, that means that they have no faith in the Federal Reserve at all. So that isn't going to change until the next Fed meeting, right? Unless the Fed were to interject intra-meeting, which just, you know, they've got their chance tomorrow. So if we do have that ugly selling, the only way we bounce any sort of significant move then is just we get rid of all the sellers. They're done, they're gone, and we move on. But man, does it look like we want to come down here towards that 347 level on that, because it's just a really, really nice looking zigzag. Just a little bit oversold right now, and we're right at a fib level, so it is ripe to bounce now. But man, if we bounce now, we're setting up the downside. That's what I've been looking for our alert subscribers, is to come back up and fill the gaps and set up the downside. Haven't wanted to chase this. There's no way. I know it's easy to go back and look and say, gosh, I wish we were short right here. But after that gap down on Friday, there's no way that I'm chasing that move. You know, it gapped down again on Monday, and you would have said, well, if you would have gone short on Friday, you would have been okay. But I'm just not programmed that way. You know, catching that that move to the downside was high risk. It would have paid off, but I just don't do that. So one of two things is going to happen. Here's what we're set up for. We either have just a nasty, ugly day tomorrow, and we come down here, the VIX spikes, we wash out all the sellers, and then we're ripe to bounce. And then you just play the upside and you forget the downside. Or the Fed says something to calm the markets a little bit, and then we bounce back up and we have a little bit of a rally, and then we start to get earnings, which we all know are going to not be good. And then we roll over and we trade the downside then. So those are the two scenarios right now. But thanks for reminding me on this, because that's a great looking zigzag pattern and gives you a potential target.
Absolutely. Thanks for covering that one off. So we'll move back over to Zoom, and Mike would like to look at ABBV.
ABV. And just trying to hold that. When last time we looked at this, was it just last week? I mean, I know we looked at this one recently. We said it had to get back above 150, right? And 150 was the key. It needed to get back above there. So was that a week ago? So was that on the 7th? So we would have been right here. We were right there, 150, right? It says it's got to get back above 150. Well, it didn't. 150 acted as resistance, and now we're coming down again. So we're a tiny bit oversold, not significantly. So you look at this and say, maybe we try to bounce back. I don't think that holds. If it were to bounce back to 150, it sets up another short. I don't think it goes that high. If it bounces, I think it hits the 10-day moving average. It looks like the next stop, because there's some pretty good support there, is 130. And if it can't hold that, this one is just a nice stair-step pattern here, kind of like how Bitcoin is. So if it doesn't hold 130, it goes to 120. So maybe a little bit of a bounce. It doesn't have to, because it's not that far oversold, but maybe a little bit of a bounce. But the next significant point to try to hold is 130. And if it doesn't do that, it's 120. And then look at that. If it doesn't hold 120, it's 110. So you got 10-point steps here on this one. So that one could be a pretty nice downside trade moving forward.
No question there. We'll go back.
We are headed back towards, sorry, I didn't mean to interrupt you, Zach, but 157% extension on the wave 5. Remember, we're going to retrace 61.8% of that. So, you know, we've still got a ways to go. Okay, now I'm done, I promise.
No worries. So we'll move back over to YouTube. Thomas would like to look at futures for corn.
For corn. And there we go. So kind of consolidation here in corn, the July contract, and it isn't a, oh my goodness, man, I don't want to see that play out. If corn starts to go like that, that affects gas too, right? So that's just a double whammy. And then the grocery store. So we are in a bit of a consolidation right here. And, everybody's been talking about wheat for a while. Haven't looked at the corn chart here in a bit. We do have a nice triangle pattern, and let's just hope that's a downside breakout and we make a new lower wave 4. But even then, if we stay in this 5-wave pattern, we're probably going higher. But if this breaks to the upside out of this triangle and we run up there to, that means more pain at the grocery store for a while. You're starting to get the idea, and you want to think that Einhorn was just making, a real dramatic comment. They do that, right? Just for, their 5 minutes in the sun type of thing, 5 minutes of fame. He's famous enough, but man, if inflation is running away, and I think if the Fed does disappoint, this could play into it. Actually, thanks for bringing up this chart, because if the Fed disappoints tomorrow, you can pretty much count on an upside breakout there, right? Because they're going to say like inflation's here, it's going to stay, and that probably breaks us out to the upside. Bit of a doji there too, so it's kind of right in the point of a triangle with a doji. Now, if the Fed comes out and they're really serious, and it looks like, hey, we're on top of this, perhaps we get a downside breakout out of the triangle. But remind me to look at this one next week, or if you're watching it, just see what happens tomorrow based on this reaction from the Fed. But it's like, okay, where's inflation going? And man, just from the grocery store aspect, the food aspect, and even gas, we just don't want to see, with the ethanol side, just don't want to see that break to the upside, but it could.
Lots of unknown in this market, no question there. I see we are at a minute before tomorrow. Yeah, no, absolutely. Another external factor there. So we have a minute till time. As always, I'm happy to stay on as happy as long as you are. So you just let me know.
Yeah, let's go ahead and do one more.
All right, so that works. There's 2 questions along the same narrative here from both YouTube and Zoom. David from Zoom says, since this down move in all the markets is so volatile with so many gaps, is it possible that it's not wave 5 but extended wave 3?
Well, I mean, there's always a possibility that the 5 relabels to a 3. I just don't think so, but we're only at a 38.2% wave 4 correction. So could that relabel and this 5 turns into a 3 and that was just a corrective bounce? It is possible that happens. And if the real cathartic ugliness that it talked about happens, then we could see that. But then also the other side of it is, if it's as cathartic as what I'm saying, it should be the wave 5 bottom, which would not yield a relabeling. So is it possible? It is, but I think we're going to get an idea tomorrow by how the market. I mean, just sit back and fasten your seatbelts tomorrow afternoon. It's going to be wild with all this selling. If they do have to cover shorts, it could be an incredible rally tomorrow. If they disappoint, it would be like, where's the bottom? So, man, going to be a really interesting day tomorrow. So, long-winded answer: could that 5 relabel to a 3? It could. I don't see that scenario yet, but it is possible, especially with the wave 4 only going to 38.2. All right, thanks everybody, especially on all the subscribers and live stream services. Thank you for joining us. Tomorrow is going to be a great day, at least if you enjoy the markets. If you're long, you'll find out whether it's a good day or not. But thanks for spending your valuable time with us. We hope you found that an informative and educational use of your time. And we'll talk to you again next week. We're going to have a lot to talk about.